Restrictions ease across the globe and border restrictions also reduce. Gary Glover from Novus Capital is looking at the trading opportunities on the market this week. Good morning, Gary. How are you?
Yeah, I'm excellent, Chris. How you going?
Very well. And we're looking at the weekly newsletter that you send out. We've got a couple of trading stocks to get through that we'll get to in a minute. But you've also been looking at the portfolio. The performance has increased significantly. It's looking that it's up 30-odd% versus the market that's 7.5%. So what's been the main driver of this performance?
Look, we had a few shorts. We locked in a bit of profit on the way down, and then obviously, I think the Aussie market should, as we've sort of been saying here, that every time the Aussie sort of market sells off there, it should bounce back stronger than the US indices. That's what sort of happened in 2000 there. Each time sort of our quality sort of industrials would bounce back pretty strong. So that's kind of the motto here. But yeah, I mean, it's interesting here. I actually thought it's funny. I didn't realize. I just thought on the weekend looking at all the charts there. The ones that really jumped out to me were things like the travel and a lot of the recovery stocks. So we're kind of hearing anecdotally it's sort of about Europe starting to open up, a lot of the restrictions starting to ease away. So the charts was sort of suggesting, hey, maybe this is the real recovery. We've had a few false starts on the recovery trade, which obviously the stocks have had a bounce but then the recovery's waned and we've come back again. But I couldn't help thinking on the weekend there that maybe this is the real recovery is about to start here. Maybe the worst is behind us for COVID here. All the data suggesting that each strain is getting weaker and weaker. Countries are starting to, sort of lighten up on the restrictions. And yeah, ScoMo coming out on Monday afternoon was a bit of a surprise, but yeah, I think loosening the travel restrictions. I just think, yeah, maybe this is, I was kind of worried I think we'd see a bit of a bounce in the market here, but again, our market's going to bounce a bit stronger than the US market, but I think it was going to probably hang on a bit longer than a normal. It worried me on the weekend where everyone was sort of saying the same, that we'd just get a bounce for a couple of weeks and then roll off pretty hard. I always hate it when everyone agrees because that's normally when it doesn't happen that way. So the 60-year cycle sort of this is the one that's been following, I think, so far pretty closely. And that's the sort of that indicating here that we'll get a bit of a bounce, but it will hang around a bit longer, maybe into March. So maybe this bounce might just, might be a bit weak in the US, but I think it'll hang on. So just interesting how it's all playing out here, but maybe that recovery, the real recovery here will maybe that'll give the market a bit more of a boost here and maybe make this sort of lower high sort of hang on a bit longer than it normally would.
So that note that in your commentary for the NASDAQ sort of into early March. Are you seeing the same sort of thing for the S&P 500 as well?
Yeah, so I mean, look, the interesting thing with all these charts here is that, particularly when you look at all the US indices, what we've got there is an overbalance of the trend there, Chris. So what that means is like each pullback has been pretty small in size or being what we call uniform. So each sort of correction is sort of similar in size and similar in length as well. And then now this correction has gone, it's the biggest correction. So NASDAQ's fallen like 19%. So that's the biggest correction of the move so far. And it's the longest, that's basically the longest duration as well. So a lot of weeks gone through there. So that's what we call an overbalance of the trend. So when you get an overbalance of the trend, that's usually that's the point where the trends change. So always got to be mindful and be worried about an overbalance. So oftentimes after an overbalance there, you get a bit of a counter move. So you might get you normally basically go and make a lower high. Occasionally you might even rally up and make a marginal new high, but predominantly, I'd say probably 70% of the time you make a lower high and then go deeper. Occasionally, you can sort of hang on a bit longer, but an overbalance is negative. It's very negative. So, not too many times you get an overbalance and then continue the trend. You normally would get, a bearish phase or at least like an ABC or something a bit more corrective. So, the odds definitely favour another leg down with an overbalance. But yeah, it's all about sort of how long, whether we just get a short counter trend here or something a bit longer. I'm sort of leaning towards something a little bit longer than everyone's.
Well, that reopening, as you noted, Scott Morrison coming out earlier in the week, and the travel stocks coming as well. When you look at the S&P 200, so the ASX or the top 200 XJO. How do you see that overbalance and that possibly longer trawl out of the lower high? How do you see that playing out for Australia?
Yeah, so I was looking at the chart there. Obviously, we had that 68.50 as a bit of a focus area as to where we should get down to. We did a little ABC, and then we probably get a bounce from there. Bounces, look, they should at least go back up to that 7,200 as a minimum, but just might go a bit higher there. Just we go, keep talking about the sort of similar period in 2000 there, but in 2000, every time the US market sort of had a pretty deep fall, we fell with it, but then when it bounced, they had a bit of a dead cat, didn't go too far, but our market bounced back really strongly. So I think even a couple of times we might have even bounced to new highs, which was quite amazing. If you go and look at the NASDAQ, it was, this massive decline with a few counter bounces on the way down, but our market did this like a big expanding top there. So that's why I sort of can't be too scared here about Aussie market sort of us being off like 12 or 13% is a pretty decent decline for us. So I think you're going to be, every time we get sold off here, you're going to be looking at some of the quality players because I think we will bounce a bit higher there. So I think maybe 73, 7,400 is probably even, got potential here for our market. So I think this might, it might be messy here, but I think it'll hang on a bit longer than everyone thinks. So but I think ultimately we'll go deeper in the year, but I really think maybe the real weakness might come from, it'll be sort of March, through to June, or maybe even sort of slightly later. So, yeah.
Well, if we look into the Australian market one layer down, you've picked out some funeral care operators. So Invocare's one that you've picked up. What's been the appeal with Invocare there?
Look, that's just really a sideways sort of pullback here. So although we sort of had a bit of a retreat there, that retreat is what we call corrective in nature. So it's basically overlapping. So it's not a strong trend. It's not a strong downtrend. It's actually more of a sideways sort of move here. And even the volume, the last sort of 4 or 5 weeks before the low, there was just no volume. So no selling taking place into that sort of low. And we've got a bit of a reversal week. Some good volume came in, and then last week some volume as well. So that's a corrective there. And that sort of hit the bottom of our channel as well. So we're seeing a few stocks sort of build these sort of what we call this 0, 1, 2, 3 pattern, which is like that's kind of your like a basing sort of pattern there, often referred to a rounding top or rounding bottom here. So there's a few stocks making these really nice basing patterns here, with 2 or 3 sort of high lows, and then and these are what we call corrective declines there. So you see that every time it's popped up, it's moved a lot faster, a lot quicker. So I think this looks pretty positive there. And just you think about the recovery trade there, obviously the funeral operators have been struggling, with restrictions, and obviously the social distancing is sort of has been negative for them. So once we sort of go back to more normal, once things normalise for the funeral operators there, then obviously people go back to buying the premium packages and more numbers there, and I think the death rate normalises as well. That's going to be kind of positive for these guys. And I just they would have tightened up here, got a bit leaner and meaner through the down cycle here. So I just think this is definitely looks pretty positive there. Looks a sort of stock that's ready for the recovery.
Well, if we're talking about leaner and meaner, you've also serviced some of the travel companies that have had to get leaner and meaner throughout the period. Would you say Flight Centre's been one that's reassessed their business model and come out with a bit less fat in the model?
Yeah, look, to be honest with Chris, this is the stock that I rang I would have rang every client I know and asked and suggested buying this stock here. I just made, $24 is the old $44 in terms of sort of where it was sort of pre-COVID. So if we sort of think, Flight Centre will recover and get to a similar market cap at some point in the future, it might take 12 months or 18 months, a bit longer there, then that's sort of, I just felt it would go back to that old market cap. So that was, from $16, that's up to $24. Yeah, it's like a 50%, 40-50% move in the stock. So I just think, this is a good long-term play here. Technically, we can see this big base here again. We've got 2, 3, 4 higher lows sort of building up here. Again, the last decline was sort of, corrective, sort of low, low volume there, and obviously we saw a bit of volume coming off the low here. I just think this is a stock that I sort of felt comfortable, but sort of longer term, just looking at sort of market cap and the sector, and just the fact that it was sort of holding up pretty well. So we've seen, you've had to sort of buy these travel stocks when things are out of favour, not things a bit gloomy. So I just think that looks pretty good there. So I think it goes to sort of 24. Then that probably goes back up to back to the old market cap there. But if it gets to it too quickly, it's probably a sell here. Probably come back down again. So, but I just think this is good quality company there. I think again, these guys would have tightened up a little bit. I know there's a few more shares on issue there, but that's a reason why it won't go back to $44. But from here to 24 is a pretty nice move. So I just think this was sort of a bit obvious, if I'm honest.
So it's good movements for Flight Centre. Does Webjet similar sort of movements that you're seeing there?
Similar from a technical point of view, the fact that we've sort of come back to sort of key support and bounced off there, but probably not similar in the fact that the market cap is definitely, this one did a massive raising, a lot more shares went on issue there. So I think around about might be around about sort of 550 or something. It might be the equivalent to the old market cap, sort of at the top. So so we're probably not far away from that. So just because there's so many more shares in issue, but I still think Webjet's a great business. So I think it obviously bounces from here. I think you'll see a bit of a bounce because obviously key technical zone there. But probably the market cap is probably not quite as juicy there, just because the raising was sort of substantially, just a massive sort of raising there. But that won't stop the market getting excited by it and pushing it higher. So it looks okay as well.
Right, so we move from the travel stocks into the milk companies. You've surfaced A2 and Synlait, which you've also surfaced a few times before and traded. What's A2 doing that's catching your eye?
Yeah, so nothing to do with the recovery here or the reopening play here. I just sort of like this. The sector sort of got me interested there. So looking at A2 Milk and Synlait Milk, I just sort of feel like they've sort of been this sort of sideways range, sort of coming after a bit of a decline, and they sort of started to sort of base here. So what we want to sort of see is either start to see maybe a couple of higher lows there, or looking for maybe like a false break here. So I noticed sort of A2 Milk went to a slight new low and then kind of bounced here. So we saw a bit of a tick up in volume as well, which I like to see. So just need to see some support here. Sometimes you can get fast moves here. So the reason I like this here is I think there's really upside potential, quite substantial. And if I'm wrong here, I'm only risking a small amount here. So it's I think it looks like a reasonable. It's definitely out of favour here, obviously at the moment. But I just like the risk reward here. I think it looks pretty interesting here. Just feels like it's sort of the decline has sort of tapered off here. So I just think it's sort of more in a sort of a sideways range here. So I like these sort of false breaks here. What I think is going to be a bit of a sideways grind for markets for a while here. So definitely liking the false break here. They're definitely seeing quite a few of them do quite well here recently. So definitely looking for that. It's the same for Synlait there. Basically made us, even just making a false break of the previous swing low can be enough for a little false break. So I think that looks pretty good as well.
So they're the two milk companies. You've also had a look at IOOF and GEM. So we'll get to GEM in a second, G8 Education. Why IOOF? What's that done? What's that sector doing?
Yeah, look, this one just sort of jumped out at me just because the volumes are pretty high there. So I've seen a lot of stocks that have sort of had these declines there, and then the volume dry up there. But then I've seen a few bounces there, and if we don't see a lot of volume coming, which to be honest, they're probably 80% of the stocks I looked at didn't have much volume going through there. So that tells me, you can still bounce there with a light volume, but you normally don't get sort of follow through here. Whereas I think the IOOF here really had some really strong volume there. If you look at sort of the volume over the last few months there, it's a big jump there. So impulsive move off the low. We do have a couple of higher lows in there as well. So that's kind of, I like that sort of construction as well. Just looking for maybe small counter move, light volume, and then maybe a safe setup here. But that looks pretty interesting as well. Just kind of jumped out to me the most here. In the last sort of week or so.
Okay. And then if we circle back to the reopen trade, G8 education, people going back to work, people being more confident to send their children to daycares, are you seeing that being positive for G8 education?
Yeah, that's right. I think this is a reopening sort of trade as well. So it's got that on the favour there. And I just look at the price action as well. It's like it's been going sideways here. So it's obviously been building out of that low. Every decline has been sort of sideways orientated. Even the last sort of couple of months here, it's just sort of, well, the market's been retreating here. This thing's just held up pretty firmly. It's literally gone sideways. And so when I see a big consolidation, big sideways consolidation there, oftentimes when they sort of pop out, they'll break impulsively here. So I just think, this is the right time here, and technically it looks pretty good. And you've seen a little bit of an uptick in the volume the last couple of weeks as well. But I think once we sort of break out to what I call that B wave break to a slightly higher there, I think that's when you sort of follow through. So I think it's already had a bit of a jump here. So I think it's looking pretty robust. So I do like that.
Okay, so there's some decent trading shares for the week ahead, and good insights there for trading volume and also using the fundamentals of what the market's happening. If someone wants to get in contact with you, it's just the number and the name on email address on screen. Is that the way, Gary?
That's right. Yeah, perfect, Chris. Yeah.
Very good. Well, thank you very much for the insights once again, Gary, and we'll come back again next week.
Thanks, Chris.